Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elonin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Happy Monday. Hope you all had a great weekend. Welcome to Pre-Market Prep. Spencer Israel, Dennis Dick, Joel Elonin here. He'll be back in a second. Wow. What we got to talk about Bitcoin this morning. We got to talk about oil. We got to talk about gold. We have an M&A deal that just broke a few minutes ago. I want to talk about 19 minutes ago now, 20 minutes ago. We have a deal in the, Spinner's asking a good point. Is it technically a SPAC merger? Technically, maybe not. DraftKings buying Golden Nugget. Dennis, I hope you still own yours. We'll talk about that as well. Tim Quast will be on the show at 8:30.
What did they pay? I'm excited. I didn't even know. When did this was announced?
20 minutes ago.
I missed that. I own it. I'm 20 minutes late to the party.
Yeah, and then so Tim Quast at 8:35. Matt Hammond from IPO Warriors on at 9. A lot to get to, guys. Smash that like button. And Joel, how we doing in the pre-market session? We got a lot going on.
Holy moly! It's a Monday, and look at we got absolute chaos in the markets. What is going on? No easing into this Monday morning, folks. You just got to get fired up, and I'm just going to run everything down. S&Ps are down 7. They were down 17, straight down from that 6 p.m. open. We know that's going to change soon, but that all-time closing high on Friday, 29.50, that's your high. We'll be keeping an eye on that. Evidently, no one needs crude anymore. That's down 250 at 65.77, 60 cents off the low. No one needs gold anymore. Gold is the story. We'll go into that in more detail in a little bit. It's down 1630 at 1746.80. We did dip under 1700, under 1690, under 1680. So we're $70 off the low in that. Silver, no need for silver. That's down 32.6 cents at 24 even. That had been breaking down ahead of gold. Everyone needs Bitcoin in their portfolio. That's up almost 3K. Got a little juice over the weekend, moving up on 46K at 45,915. And Ethereum's been the champ. If you've been looking at Ethereum, that broke out of the trading range I had put in there on July 28th. That's up $201 at 31.42. Triple D, I mean, you must have woken up this morning, turned on the screen, and fireworks were coming out of there. You doing okay from the Friday night session? Or you
not sure what you're referring to. We were down a bit, but actually it was pretty quiet. Well, I'm excited about this Golden Nugget thing because obviously I do own Golden Nugget. We've talked about this on the show. I've had it for, I don't know, I've had this probably for almost a year now. Tell me about this merger. Looks like right. I'm going to get paid this morning.
It's an all-stock deal. Are you ready for your magic number?
Yeah.
All right. Golden Nugget online gaming stockholders will receive a fixed ratio of 0.365 shares. 0.365 shares of DraftKings stock. DraftKings is acquiring Golden Nugget in a deal that comes out to about $1.5 billion in value. So that's 2 weeks, 2 big M&A transactions in the gaming space. We had Penn buying the Score last week, and we have DraftKings buying Golden Nugget online gaming this week. So GNOG did spike off that, but again, 0.365 is your ratio. So if you own Golden Nugget, that's what you got to know as far as where your shares will trade as it relates to DraftKings.
So if you just do the quick math, take the bid, 52.50. I took the bid on DraftKings. I know it's 52.70, but if you take the bid, go to your trusty calculator, times 0.365 using your grade 2 math, will give you $19.16. That's off the bid. That's obviously as the merger closes at the closing date. There's usually a little bit of risk premium they put in there. So I would think this would probably open in the high 18s. I would think. And it's going to obviously chase the DraftKings price around. So
GNOG, right?
GNOG.
It's going to chase DraftKings around. So DKNG, as it moves now, you're going to move 0.365 for the GNOG. So all your hedges to short DraftKings if you want to hedge it, or you just wait till GNOG opens and outright sell. I don't know. I haven't decided. Do I want to own DraftKings is the question. So if I want to hold this, do I really want to own DraftKings? I don't know. I kind of like DraftKings.
Well, you have until the first quarter to decide.
Yeah, I'll probably ring the register. I mean, you're getting paid, where GNOG overnight, $12 is going to probably open in the 18. So
is it halted 50%. Right now?
It's halted right now.
Yeah.
Yes.
But it's bid 18. I mean, the Arabs are going to bring it up into the 18s, I would think. As long as DraftKings stays up above 52.50, like we said, I would, you're going to be up in the 18s on because there's probably not a lot of worries about antitrust or anything in this case, small companies. So, I'm probably going to ring the register today after the open. We'll see.
Huh. 2 deals in a couple days.
It's nice when you wake up and you get one of your stocks taken over. And that's been a dog for me, too. Like, I bought that thing about a year ago.
Yeah.
Around $12 or $13. And it went to 25 or 27. I sold half around 23 because I was like a double for me almost at that point in time. Maybe it was 24. But I sold about half. I often do that. Stock doubles. I sell half, then I'm completely playing with the house's money. In this case, I think I did that again. And obviously, the stocks come all the way back down. And I was like, man, I should have sold it all. So you get the relief. And obviously, it's all about DraftKings now if you own that.
Matt,
somebody's suggesting buying Golden Nugget before the market open. I mean, you can't. It's halted right now. It's going to open at the ARB price. So the only people who were lucky enough to buy were the people that probably had stock didn't halt in time.
Right.
Because it's 15.50 it was trading. I mean, when did the press release come out? Again, remember we had the rant about this.
Yeah, same
Here
thing.
It is again.
Okay,
they don't halt the stock in time.
I will confirm it for you. Ready? What GNOG?
Yeah.
GNOG halted at news pending at 7:41 and 57 seconds.
Yeah. And that was literally 11 seconds after
the press release came out.
Yeah.
Actually, the press release came out 7 seconds before that.
I have 7:41:44 from the Pro.
Yes, so it's
11 seconds before that. 57:44.
Eternity. You mean eternity?
Yes, eternity before. So all your HFT algos pick off all the retail traders that had orders sitting out there, and they're all going to obviously get a lot worse price because of that. Thank you again, exchanges. Thank you again, companies. They need to halt the stock before they release the press release. If you're going to halt it before the press release. And I think all stocks that are announcing a merger should be halted before the press release, because it's not fair that a bunch of high-frequency traders go and pick off all the unsuspecting retail orders that are sitting out there, because it's a retail stock. A lot of retail traders selling this, if you look at the tape, at $14.70, $14.80, $14.90, and they're all in $15, and they're all getting ripped off because the stock obviously trades substantially. It's going to trade substantially above that. So once again, this is an easy fix. Regulators, it's an easy fix. Mandate that if you're announcing, and I've had this rant about this before, but if you're going to announce a merger, it is mandatory that the stock gets halted before the press release gets issued. 11 seconds after is useless. They try to time it and get it both perfect, and they never do. Halt it 5 minutes before. It doesn't matter. Halt it significantly before. News pending. Then announce the merger. Some companies do it that way. That's fantastic. Have all companies do it that way, because it's not fair that, certain traders that are obviously, news algos written in there, high frequency traders, are going to have a huge edge here.
Okay,
give them 11 seconds.
Or the guy in the guy in the mailroom. He's lifting offers.
Stop, because I want to watch this, because it's going to open at 8:10, which is in 15 seconds.
Okay, let's watch it open. I predict DKNG is now 53, so it's going to open even higher.
18 and a half?
No, it'll open upper 18s, I think. Upper 18s.
Okay.
18 and a half. 18 and a half is not a bad guess. Let's see.
The other thing, someone,
not a bad guess.
someone
17 and a half. That's low, in my opinion. 17.98. That's low for the math we just did.
Yeah, it is low.
Yeah, that's low for the math we just did. They'll probably hit DraftKings a little bit. The ARBs will bring that in. So what they want to do, they'll probably start to bring the spread. I would imagine they brought GNOG just up slightly, and they bring in the DraftKings a bit. So we'll see. But that seems a little bit low to me. Maybe you got a lot of people excited ringing the register early. I think mid 18s. I won't sell my stock at 17.75. So,
well, why would
unless DraftKings comes significantly lower?
Right. True.
I'm giving up a buck and a half.
I don't think there's, someone was asking about buying it now. One reason you would do that if you think someone else may come in and pay a higher price. I don't know who. I mean, Penn just bought Score, so they're not going to be. I don't know who would be coming in to compete.
Nobody thinks that, Joel, because it's trading below it, way below it.
Yeah.
So there's no thought process of that happening right now. We often say that when a stock trades above its takeout price, I was expecting.
Yep.
If that math is right, and I'm just taking the math from the number you gave me, Spencer.
Yeah.
I never read the release. That seems low, and it is coming up now here a little bit. So the risk arbs, I believe, will bring this up into the upper 18s. If DraftKings, and again, it matters what DraftKings all of a sudden rolls over, then GNOG will roll over too. But that spread right now is about a buck. Well, let's just do it. Let's do the quick math. We'll do it again for fun. So go 52.85 because DraftKings come up since we just did it. Times 0.365 gives you 19.30. That's a $1.30. So it's already, at 17.5, that was low. 17.60 was a gift. Now it's 18.10. I think they'll bring it into the mid 18s.
All right.
Like I said, I would sell it in the upper 18s just to not be bothered with it. I'll give up the last 30 or 40 cents and move on because I feel like I can make more money with that money. With the time value of it. Yeah, and that's, the other thing to consider too. Time value of money is fairly low, but, I think I won't sell it if it's a $1.50 out. I'll wait till the merger gets closer because it's worth more that way. So then that's what the risk arbs, and that's why it's coming up, 18.10, 17.60. Look, we just give you 50 cents on pre-market prep.
That was fun.
18.20 now.
That was fun. It's not every day. Not every day you see a stock halted and it opens at 8:10. Like on
right when we're talking about it.
We're talking about it. Yeah. Anyway, let's talk about Bitcoin this morning because not only are all the mining stocks on the top of my gainers scanner in terms of price, they're on top in terms of volume as well. They're leading the market this morning in terms of price and volume. I'm talking names like BTCM, which is over 2 million shares traded, right? BITF, also over 2 million shares traded. BTBT, which we were familiar with, over 1 million shares traded. HUT, HUT, over 1 million shares traded. All up. Well, actually, BTBT is only up 4%. The other ones are all up double digits though this morning. And you got CAN, you got Mara, you got Riot. You got the whole gang is trading higher this morning. Again, because we talked about this at the top, Bitcoin is back, $46,000. So all the Bitcoin stocks.
Ethereum is back. So all
Ethereum moved first.
Ethereum. I told you I traded in most of my Bitcoin for Ethereum. I still have a small position in Bitcoin, a fairly sizable position in Ethereum, which is getting bigger. So it's been good so far. I actually was down in the Ethereum. I think I bought around 2,300. And it went down to what, like 16 or 17? I was like, man, that sucks. So I didn't put a huge chunk. I think I put about 1% of my net worth in it, though, which is significant for me in a crypto play. That's not speculative. When I'm putting, my average stock, when I'm buying a stock, I just put 1 to 2% of my net worth in it. So I treated it like a full size, investment. And it went down when I bought 2,300 down to 1,700. I was down 20 or 25%, and I was like, that sucks. But where is it now? Where is it now, Ethereum?
The futures are at 31.34, and you know what? That's halfway back in the move of the entire break. Fine, it took some time, but that's really interesting. And then I pulled it up for Bitcoin. And I guess coming back on half of that move too. That's closer up to 47. So congratulations to Ethereum leading the way there. But clear path. Let's see. We got to 46.
I think Ethereum's going to continue to lead the way.
Yeah,
I'm a fan. I've had the arguments on that before, though. And I have a little bit of Bitcoin still, too. So I don't see why they can't hit all-time highs, Ethereum and Bitcoin. I don't think they're going to go straight there. If you're chasing here, wait for a pullback. In my opinion, I would wait for a pullback, but I don't see why. We can't see all-time highs again. I don't know imminently, but in by the end of the year, maybe we see all-time highs.
Sell
not
crude.
Going away.
No, sell crude, buy Bitcoin. Is that the spread?
Sell gold, buy Bitcoin.
Sell gold, yeah.
So crude too.
Sell gold, buy Bitcoin. Gold getting hit again here on the weekend. Nice segue. Hit again on Friday. Hit again over the weekend here. Gold's ugly.
That's ugly.
I own almost zero gold. I've had zero gold for a long time because why? It's just been underperformer for the better part of a decade. I believe JC Peretz was showing that in a chart over the weekend.
Yeah.
I mean, precious metals have been out of favor for a long time. Precious metals just aren't as precious as they used to be.
They're not precious.
not by this market. I mean, think about the younger generation. Are they bling bling? Are they? I don't think they are.
Dennis,
you're so hip, man. Bling bling.
Dennis is bling bling for sure.
Oh yeah, I'm all bling bling.
Yeah. No, they're not.
We were looking for a piece of gold. I forget why. My wife was like, I don't even know if we have any gold like jewelry in the house, like not even a ring or anything. So it was like for the kids. I was like, I can't even find any gold in the house. So
yeah.
I just don't think people put as much value into it anymore. And that's why do I want to own gold? As an inflation hedge, I'd rather own stocks. I'd rather own companies. I'd rather own crypto. To be honest, as an inflation hedge, I don't see, and the charts themselves, the technicals on these are not looking good either. They're looking like silver and gold's rolling over here once again. So I don't know. I don't see the luster.
Do you remember for a brief moment when silver it had made its biggest move like ever? Is at an all-time high, right? Was that this year? Not an all-time high, but it was like a 20-year high, right? It was.
Yeah, silver. Well, when they thought Reddit was going to grab it,
silver got to 30.
Yeah, unfortunately, the all-time high is 50.
All right, well,
I'll never see that again.
Whatever, close enough, right? It was like a 20-year high or like a 10-year high. Maybe close. I don't know. Anyway, that was this year.
Just real quick, is there any news on this real bad segue here on Microsoft? It's trading up 48 cents here, but it's like it's ignoring this 290 here. Are we busting through 290 today? What's going on? Is there any news?
No, I didn't see. I saw nothing on my.
Wow.
This is a good setup, Joel. I'm long Microsoft in the long-term portfolio, but if this breaks through 290 and we are doing it in the pre-market here, this is a huge breakout for the stock. This 290 has been the level of all levels. I think it's
look at that.
Yeah, I think it looks great on technical breakout.
Yeah.
If it actually does get above the 290.
Yeah, I don't know. I mean, it's traded some decent amount of stock, and it looks like it's bid there. I don't know. I just wondered if there was any news on it, but
no.
Okay. All right, keep an eye on that one.
Speaking of inflation, how about inflation for food companies? We have another deal on the table this morning. Sanderson Farms, SAFM, going off the board here at $203 per share. Cargill and Continental Grain are doing a joint venture, and they're going to buy Sanderson for $203 per share in cash. So
was this rumored or something? Because you had the nice bump up. Wow, look at that one down. Whatever that news was in June, was that earnings or something?
Yeah.
When did this one get announced?
This morning.
What time?
Well, okay.
I'm on a lock.
Okay, here, ready?
I'll rant stage here.
I'll go to the halt and I'll go to the press release. The press release was out at 7:00 on the dot, and the halt was at 6:59:06. So they got it by almost a minute.
So they got this one. That was better.
Yeah.
And you know what? Nobody gets picked off. So obviously we like that better. We don't want everybody just to be, at a huge disadvantage to those with speed. Halt the stock and take that advantage away. So congratulations, Sanderson Farms. Getting the halt ahead of the merger announcer is always the better way to do it.
Yep. So we're trading at 196.80 right now. Again, 203 is your price. So anyway, inflation in food, inflation in food stocks, inflation everywhere. Okay, let's move on to. You want to talk? We should talk oil. Let's talk oil because oil stocks are. Bitcoin is leading us higher this morning. Oil is leading us lower this morning. They're blaming China. There was some data out over the weekend. I guess oil imports were low, and China's we know how they are. They're zero tolerance on I don't know how to phrase it. There's zero tolerance when it comes to allowing the spread of COVID. So they shut down a bunch of events over the weekend, as I guess the Delta variant still is spreading there as it is here. So China, the weak imports, plus they are quick to pull the trigger on shutting things down, which seems like they're trending in that direction now. Oil is trading lower across the board this morning.
I mean, you got to bounce kind of where you should have, right? 65.01 was your low on July 20th. You bounced today off 65.15. But you're hanging out here, man. You're hanging out in a 65 handle. Had these lows in this other. The next daily low comes in at way down at 63.10. But you had the retracement, man. It just wasn't. I tried it here and just couldn't hold it through this up move here. And then you finally came down, but big for crude to hold 65. After that, you're looking at just another whoosh on the downside. How are the oil stocks trading this morning?
Oh, they're getting hit. You got XLE trading down 1.6%, XOP trading down 2.4%. Full disclosure, I've got the pair on there. They're trading. They're getting hit here this morning. So I mean, go to the big guns, Exxon and Chevron.
Yeah.
I mean, we've been, kind of trending down. We've had this, counter trend rally. We always say, when stocks start trending down, they get the counter trend rally. That's a selling opportunity. That was the case, at least on Friday, with Chevron, Exxon. And, if we look at the XLE, same story, 56 down to 46, counter trend rally, consolidating around 50. Now you get a breakdown here, maybe a resumption of the previous trend. I don't want to own oil. Not at these prices.
Don't want to own oil or gold. We just want to own Bitcoin, I think.
That's it.
From this show.
Go crypto.
But you want to talk about AMC for a second? We have
earnings tonight.
We have earnings tonight. Speaking of earnings, actually, here, why don't I just bring up a calendar for the week? We are still. Last week was the heaviest, but we are still solidly in the meat of earnings season. So we've got AMC tonight. Throughout the week, and we also had the trade desk this morning. But we'll hear from Jumia. We'll hear from eBay. We haven't talked eBay for a while. We'll hear from Baidu, from Airbnb, from Disney, from DoorDash. And we'll hear from Rocket, Wix, Neo. So there are some big names reporting. SoFi. So we do have some big reports this week. The big one today, of course, is going to be AMC tonight after the close.
Mitch making the point, do they matter? Do the earnings matter?
Yeah, I just say
I mean, when you're this disconnected from fundamentals, if they want to take it higher, they'll take it higher. If they want to take it lower, they'll take it lower. I don't honestly know if the earnings matter. I mean, we know they're going to lose a lot of money. We know that hasn't been great. Box office. You were talking about, a lot of, estimates there for individual movies have disappointed. So there's no reason to think that they're going to come out and blow it away. But even if they don't, doesn't matter. So I don't know. I don't know if it matters at all. I'm not, I'm asking, does it matter?
No,
maybe.
No.
I mean, and I'll look at it just technically. You did.
That's
take
all
out,
you can do.
Yeah,
when they're disconnected from fundamentals, Joel. That is all you can do.
You took out the low of the move. There was like 30. What was this low of the here? It was 31.15. You took it out to 28.91. To me, you just look at that. It's all about $30. Yeah, you can see 28.91 or whatever, 31.02. There's not a lot of real estate between 20 and 30 here. I mean, if this can't get away from it's trading, down 59 cents at 32.11, if it starts looking heavy, like you see how it looked heavy up here at 40, right? For 1, 2, 3, 4, 5 days, and then boom. That's the way I look at this one. If this starts, if it gets under 30 and then can't recapture it, I mean, what? Yeah, that was 2 days worth of trading action where it went from 20 to 30. So it's not going to go right there, but boy, longer you hang out to 30. Sorry for all these people that are the hodlers out there, but man, oh man, look at having, like you said, who cares about the report? Who's going? I think I saw a box office thing that was like 2.5 million or something like that. I mean, that's so incredibly low.
That sounds right. Frankly, that sounds right.
And the butter expense, for the free popcorn, they're gonna have to factor that in. Also, they did the offerings, man. They did offerings. I bet you they wish they would have done more up there.
The biggest box office this weekend was Suicide Squad, 26.5 million which is, and that was number one at the box office. $26 million.
What was the name of the movie?
Suicide Squad, which is like a big superhero franchise.
Oh, superhero.
And 26 million. So yeah, I don't know. So okay, so speaking of all this, what do you do about Disney here? Because this is similar in the same vein. They're on the other end of the spectrum because they of course have the movies. They have the studio, and they've got the pipes with Disney Plus. They've also got the parks to go with it. You need to be vaccinated to work at Disney in Florida, and Florida seems to be where things are getting worse now in terms of Delta cases in America. What do you do about Disney here?
I want to own Disney.
Yeah.
I want to see some improvement in, obviously the cases in Florida. I had a friend had a trip planned to Disney for 3 weeks, just canceled it. Says it's too crazy down there. I'm not going down to Florida with this many cases. So, I mean, you do see this is going to impact them. So this is going to, we were getting the great reopening, and all of a sudden there will be a percentage of the population that's like, I'm going to hold off on those Magic Kingdom tickets for a few months here and, see what materializes here. Delta's hitting them. So there's a reason the stock sold off last week. Every reopening stock play bounced the last couple of days. I think it's a bounce to sell. I don't think we're at a point where we're past it. Are we going to get past it? I think we will. But I think the news flow is still going to be negative here for a little bit. So I'm nervous on Disney. I do have a small overnight position, but I'm still nervous on Disney. Talking against my book, I guess.
Let's go short term, long term. Short term, boom. Looks like this 178, 179. It looks like closer to 179. 3 highs in that area, so you'll keep an eye on that today. We're 250 away, so it doesn't look like that's going to come into play. But I want to look at I want to go to the bottom right chart here and look at the monthly. And I don't know. I mean, you've had 3 out of the last 6 months have been red since it hit 200. It's hanging in there. I mean, I see the bottom, this monthly low here is 167.10. But to me, I'm just going to say 170. If you lose that, give the $3. But just the way the monthly is, I just don't like to see these 2 months, the way it just blasted through there. I don't know if that was on the, what was it? What's it called? Disney Plus or whatever. So, be comfortable, let it hold. It's holding 170. Look at it as just a pullback and a consolidation to go higher. But you lose this 170 here, and man, there's a lot of room between 170 and 120. So I'd be cautious on this one.
Love the company, want to own the stock. I think the timing's wrong right now. I think if you're buying it, I think the timing is just wrong right now. I think you're going to get it cheaper. That's what I'm saying. Maybe down at 170, but maybe cheaper than that. Maybe get the fake down, where it breaks down but doesn't hold. To watch the news flow. I think, this is a great reopening play. I think we're going to get a great reopening with Disney eventually, but it's been put on pause because of Delta.
What if they have like a little downtick in subscribers or something?
Well, that would be
not good.
That would be not good as an understatement, because we saw what happened to Roku, and they merely were in line with their
Think
People
about it.
People are all in, giving them the Netflix valuation on Disney Plus.
Any kind of decline in the growth rate of Disney Plus, that would be really bad.
Yeah, that would be really bad.
All right. Well,
that's a bad scenario.
Sorry, I said that.
Someone
in chat said Disney's going to 0. You can hate Disney all you want. I'm sorry, but it's not going to 0. All right.
If COVID didn't knock it to 0 last March, it's never going to.
Right. Exactly.
They closed the parks for a year.
But in all seriousness, Joel brings up a good point. This thing got basically the only thing keeping the stock up for a year was Disney Plus for some reason.
Yeah. It's a great product.
They come out. Hey, actually, so Disney Plus launched, it was like a year and a half ago, right? And a lot of people got it free for a year with Verizon, I remember, right? And so I wonder, now that a lot of these initial offers are probably expiring or maybe already expired a few months ago. I wonder what they say as far as churn, but this could get interesting. This could get interesting for Disney on Thursday. So we'll be watching that. I remain long and will be long indefinitely. It is 8:30. We're going to have Tim Quast on from Market Structure Edge. Join us in 5 minutes to do his thing and tell us what he's watching this week. And in the meantime,
GNOG, nice call there, Dennis. That thing is
it went over 19.
Yeah,
it was too low. I don't know. The risk arbs were sleeping, and then they just woke up and brought it up. We told you about the spread there. I mean, the spread was too much.
Yeah, DKNG's moving up. Yep.
Not much. The DKNG went up a little bit. GNOG went up a lot. So you had the spread tighten significantly there in the last 20 minutes. So if we just go do the math on it once again, at 53.30, 50, we'll go 53.40. That's where DKNG is times 0.365. Now you're at 19.50. Now you're at 19.11. So now you're only 35 cents. It was out over $1 when we talked about it 30 minutes ago. So instant money there, actually 20 minutes ago. So it was $1. There was $1 there on the table, and the risk arbs brought it right in. So I don't know why it took that long, but savvy traders were buying GNOG 20 minutes ago.
Mitch, I see you lurking. What's up? I see you here. I see Mitch lurking. He wants to see
Mitch.
But
where is he?
He's here. He's lurking.
Money, 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 money.
I see you. I see you.
I like that song.
Money. That's all I can say.
Remember
I went
Ted
all in on
DiBiase?
gambling.
Do you remember Ted DiBiase?
Oh,
He's saying the money. He was money, 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 money. Somebody's
can't go
gonna
wrong.
pay.
Money Mitch is here, baby. Money Mitch is here.
Money Mitch is here. What's up?
But definitely, man, I went all in on pretty much gambling. I can't believe it. I don't go too many times all in on an industry.
What do you have?
I have DKNG. I grabbed it on the dip on Friday. I got it really low. I got DKNG exactly at. I just want to give my exact price here. DKNG, we have an average of 50.35 right there on the hourly. I got it on Friday. I'm going to go ahead and hold that one into it. I think this one could get up to 60.
With the merger?
Yeah.
You like this merger?
Oh, for sure. I mean, at the end of the day, there's going to be multiple of these smaller kind of consolidation plays in MMA into gambling. I was thinking, you even heard rumors of RSI being potentially bought out. It looks like DKNG went for GNOG instead, but I think they were the ones that were talking about RSI.
They chose the right one because it's the one that I own. The right one.
Good call.
Can't go wrong. A couple other ones that I think could also get bought out. You got GAN. A lot of technology behind that play. Maybe not the best long-term look, but they do have great technology stack. So I could see them getting bought out. Bally's made a good push off that 50. I was talking about that one on Friday. I'm going to keep an eye on that one. And then Genie also still pushing. We'll see if that one can continue making moves.
Yeah, that's the thing is there are so many smaller names, and there's a few in the chat as well, like GAMB. There are so many smaller names that you would, Boyd Gaming. Well, actually, I don't know how small Boyd is. Find out what Boyd's market cap is. But like so many smaller names that like you would think could be ripe for a takeover because you got a handful of big players: Penn, MGM, Wynn, Caesars, Las Vegas Sands. Yeah, my bad. Boyd's pretty big, but like you got a lot of big players and then a lot of small players. It would stand to reason that now that we've seen 2 deals in the last week, these things tend to happen in bunches. So it's not out of the realm of possibility to see a few more of these in the next coming weeks and months.
What were the you said Boyd Gaming, and then
you got like GAMB, right? GAM, which is a smaller name. I'm trying to think. And Mitch just mentioned a few, right? Genie and GAN.
What's Genie's symbol?
Genie? GENI?
GENI.
GE.
Oh, that's Genius Sports, yeah.
Yeah, Genius Sports.
Right. Yeah. So you've got, there are some smaller names out there, names to be had, right? GNOG is a smaller name, right? Names to be had. So, yeah, I mean, it's certainly, it's a land grab right now. And so they're all trying to grab it up. So yeah, it makes sense. It certainly makes Mitch. Your timing was impeccable.
Yeah, I'm going to be taking some profits in some of them right now as I go ahead and start setting up. There's no reason. I mean, I'm up like on 3 positions over 10% now, so I'm going to be starting to lighten.
What were the 3 stocks? DKNG.
DKNG. I'm not yet. Genie and RSI are two of them. And then we'll be looking for if I can get into valleys on pullbacks. But RSI, I've been averaging down on the last couple of weeks.
Around that
I'm in
10.
a great position now. But
Yeah.
one thing I did was immediately when I got into the green, I lowered it down to a regular size position. Now it's getting above 10%. So we'll be looking for a little bit pop into the 12.
Is that how you usually, when you get up 10, 20% in a stock, you usually ring the register?
Yeah,
You're not one of those hodlers.
No, 20% is my sweet spot in my data. Every time I look back at my data and I look at the trades that I make, a lot of times the trades get into that 20%. Sometimes if I get greedy, I notice that I'm pushing for the 30 and I don't take the 20, I end up taking only like 12% gains. So I try to find a sweet spot in between what I think is greedy in my data and what I think I can necessarily get on consistent basis. So to me, 20 to 30 in between there. If I can get 20%, a lot of times I'll just take it off.
And then we didn't even mention like there's also the fit here with like the esports plays, right? So you throw those names in as well, and tickers like EBET, right, and Gamble, GMBL, right, and
IGT is another one,
right? Well, RSI, and you mentioned RSI, which is So because the synergies are endless between those two, so it certainly makes sense. Somebody asked what this means for his long-term 2023 golden nugget call options. I think that's what the question was. Well, those are going off the board now. Wait, what was
well, eventually, but yeah.
What
does he have? What's the strike?
I'm trying to find it. Shoot, I lost.
Yeah, I don't know if he said the strike. I mean, the only thing with that is the longer you hold on to it, the more. I don't know. It would just be priced in. I don't know if you've been holding it.
You still have calls, so if DKNG goes up farther, you're just going to have DKNG. GNOG isn't capped out at 19.
Nope.
It's capped out depending on what DKNG does now. As a risk arb, I'm looking at the spread. Why I was telling you it was too low at 1760 this morning was because DKNG was trading 52.5, and you do the quick math on that, there was over 10% there. It closed right up and it's down to 2% 30 minutes later. So the risk arbs were just sleeping on that. But obviously, if you've got call options on GNOG, you now are interested in the performance of DKNG. So if DKNG can continue to rally, your call options could eventually continue to be worth more money on GNOG, as GNOG is going to now just trace the price to that ratio of 0.365 off of DKNG.
All right.
Let's just real quick before you bring them on. You're trading above your last month's high, which was 53.39. This month's high, 53.79. I'd really like to see it if you're bullish this. I'd really like to get it to that 56 and take it out. That was your June high. So that's the top of the trading range it's been since mid-June. So if you're looking for more on that, got to clear 56.
Market Structure Monday. Tim Quast, good morning. How are we doing, sir? How was your weekend?
Well, good to see you, Spencer. Yeah, it was a good weekend. Thank you. Except for all of California's smoke flooding into the Yampa Valley here in Steamboat Springs. The blessed breezes came along in the afternoon and blew a lot of it out. So we must have some prayers in the Yampa Valley that caused that to happen. But I'll tell you, it's remarkable how much smoke California and Oregon fires are flooding across the Rocky Mountains.
Yeah, that's not a good situation. Yeah. What are you watching this morning?
Well, because we're in the corporate analytics business as well, we think about earnings, of course, and there are 1,100 companies yet to report results. A lot of those are biotechs, healthcare, that sort of thing. This is the time of year time of the quarter, I should say, because we've gotten through a fair amount of earnings, when the sell side. So for those of you who don't know the jargon of the capital markets, I'm sure your audience does. You have the buy side, who are the investors who buy things, and you have the sell side like Goldman Sachs and Citigroup and so on, who sell shares to investors, and they support it with information. And so the sell side tends to come out around this time with their big prognostications and expectations. So we're thinking about both those things. How about you guys? What are you thinking about? I think DraftKings is what you're thinking. I caught just a tiny bit of your discussion before I joined. But
You mean you didn't start listening at 8?
You didn't say
Tim,
that.
you're backing yourself into a hole now. Joel
Yeah,
don't like that.
You didn't say that. You didn't say all the way back to 8 o'clock. He said a couple of minutes, I think. So, no, we're watching. Yeah, the M&A in the gaming space seems to be heating up. You know, we're watching. We've probably had more conversations this morning than normal about the various futures markets, because gold had a bit of a flash crash overnight, and oil's down again, and Bitcoin is up again. So it's one of those weeks. I think we're all still digesting what Friday's jobs number means going forward, right? I don't know if you have any thoughts on that, but I guess the next domino here is, okay, we got a jobs number. It was very, very good. What does that mean for the Fed and what they'll do? And we seem to be in digestion mode.
Well, as Spencer, we think wholly in market structure terms.
Yes.
So that is, what is the supply and demand in the equity market? Wherever that supply is coming from, or where the demand is coming from, that's what we think about. And I was looking at some tech sector data over the weekend, and we measure buying and selling by sector across the whole market. We're data geeks, so we think about all of these things. And it was interesting to me to look at the last 12 days in the tech sector, and 6 of them were net buying days, and 6 of them were net selling days. And so you'd say, well, that's just a perfect balance of demand. Then I look at supply. So short volume is how we think about supply, and it's up from 44% in the tech sector on average over the trailing 200 days. That is for you traders, and you should think about this. It means that 44% of volume in the tech sector, the composite stocks, is coming from borrowed stock. And it moved up in the last 20 days to 45%. Not a big change, but meaningful. So if you have perfectly balanced demand and supply is increasing, it's not a great sign. There are things to look at from a supply-demand perspective where I think there are opportunities, but the market continues to show this characteristic that we've talked about on this program all the way back to April, how there is a slowing demand curve and a rising supply curve. And at some point, that's going to create problems. And so traders have to be aware of those things. If you're just thinking about charts and fundamentals without a comprehension of the supply and demand equation, you're going to get caught out. It's very important to think about that.
So I know you've been talking about that for a while here, but at the same time, every week or something, or maybe every few weeks, I see another headline about all the inflows into like U.S. equity funds, right? That continues to be the leader. There is this clear bias towards specifically U.S. equity ETFs. The flows are good. We're going to have a record year. Probably will set the record for in like another month or two. In terms of like inflows into U.S. equity funds. So I'm trying to square that circle, and it's difficult for me.
And so we track ETF creations and redemptions and see the same thing. We updated that data for June over just last week. The data comes out every month, and it'll be delayed a couple of months by from the Investment Company Institute. And we're averaging $560 billion of creations and redemptions in the U.S. market alone among the 2,100 or so ETFs every month. I mean, it's a staggering number. So you would say, how could we have increasing flows but decreasing supply-demand equation?
Please explain this to me.
So everything's relative, right? If you look at the equation so backing up and maybe tying this whole thing back to the dollar and gold and oil and so on, and how this all fits into the supply-demand equation. I love things like Gresham's law, these references to historical concepts. And by the way, if I'm talking about the sell side, I, of course, as you would too, Spencer, I would immediately think of Ezekiel 13 in the Bible, where it says, it's the first thing that comes to your mind, right? Exactly. I mean, woe to you who follow your own spirit and know nothing. And it's the reference to the sell side, of course, in the Bible. Just kidding, people. I'm only kidding.
Watch out, Tim. This shot will turn on you, and it'll turn fast and hard.
Yeah, that's
and
right.
They will be ruthless.
That's right. Anyway, so back to Gresham's law. Gresham's law says, in very simple terms, and we're speaking of supply and demand, that if you increase the supply of money, this isn't exactly how Thomas Gresham talked about it, but he said if you say a gold coin is worth the same as a tin coin, and you put a bunch of tin coins into circulation, everybody will hoard the gold and sell the tin, and the tin will drive up the value of the things that are stores of value. And so you can see that, the principle would be Dutch tulip bulbs, which exploded in value, all the way to cryptocurrencies today. There's a basic concept, but at some point you reach an equilibrium between the good money and the bad money, and things stop rising. So it doesn't matter how much money we pump into the system. At some point, there's going to be a nexus. We're going to reach a nexus, and how will we know? Well, the dollar will rise. No matter how much we try to depreciate the dollar, as risk assets like stocks and art and real estate and so on go up in value, at some point they can't rise anymore. There's no more money to chase them up, and the dollar will begin to rise again in value. And the capacity of the equity market to continue to reflect upside as money flows into it will diminish. And that will only be evident in the supply-demand equation. And let me show you. I think this is the best way to see it, if I may. So traders, bear with me here, because this all goes back to how do you make money and protect yourself from risk? That's what we want to do. We want to take gains and not chances. That's what I like to say, right? Take gains, not chances.
I like that.
So I'm going to go to the Benzinga Pre-Market Prep August 9th portfolio here, but let me back up one step. See this over here? It says broad market sentiment 6.0. This is the measure of supply and demand in the S&P 500. So this is the composite S&P 500 stocks. And so we take all of that data, the 500 components, give or take. It can be variable because there are, there's M&A and new companies are added to it and so on, but roughly. And we want to look at how that chart that will tell us whether if it's above 5, there's more demand than supply. If it's below 5, there's more supply than demand. So let's go back a full year and look at this. This is how we think about the risk in the stock market. So back here, if you go back before March, this is a great chart of waxing and waning supply and demand, where all of that money flooding from the Fed and so on. And by the way, traders, you can go here, marketstructureedge.com, put in a name and email, and you can do this too. You don't need a credit card. So try for 2 weeks. Just use this to help you understand risk in the markets. Look where we are right now. This is where we are. So sentiment has peaked. The demand curve has peaked and has begun to decline. Now let me go back to where I was. So all across here, these peaks, surging demand, and then then people have to rebalance. Indexes will be overweight this thing and have to sell it, and then they're underweight something else. But notice that when we had a weak demand peak right back here in September a year ago, what happened to the market? It corrected. That's why we watch those things. We watch weak demand peaks, and we've had 3 of them running, and yet the market hasn't tipped over. But it's a very important lesson about supply and demand. We then returned to surging demand, and the market recovered. We dipped below that this green line tells us where there's a great entry point. Back above the red line, that's where you take some money off the table. Market bottoms, put more money to work, take some money off the table. This is what you have to do. I'm sorry that you have to do that, but that's the way that the market works. You can't just count on something 6 months from now being a good reflection of what happens today. That's not the way that the market works. So this, Spencer, it's a long-winded answer to your question, is a manifestation of Gresham's law. We are reaching a supply-demand nexus. Unless that changes, and what would change it? We can talk about that. We're going to have trouble in the market, and it doesn't matter how much money the fund flows seem to show coming in. We are going to reach a point where the risk assets cannot continue to increase in value, and then the dollar will rise. And what happens when the dollar rises? The dollar is the denominator for equities, for oil, The only exception might be gold, because gold precedes dollars. But if you look at that, if the dollar arrived, we hit a 4-month high. Oil is going to fall and equities could fall. That's the only place where we will look at something other than market structure. The dollar is an important metric. Otherwise, we will look at these supply-demand fluctuations. And so really, for now, going on, what is that, almost 4 months, we have had this pattern where supply and demand are slowly moving toward equilibrium. And a perfectly balanced market will fall because there's always a spread between the bid to buy and the offer to sell, and the bid to buy will always be lower. So if there's a perfect supply and demand balance in the U.S. equity market, it will decline.
I guess all we can do is, in the meantime, is wait and see, and see if this comes to fruition. Because I mean, probably it hasn't really yet. Because broadly speaking, I mean, broad markets are at all-time highs. So,
right, there's cause and effect. And they don't arrive in anything in our own lives. We can make bad decisions and realize good things for a period of time. Then the consequences of the bad decisions arrive. And because the market is so massive, remember, it's a $50 trillion market, far and away the largest equity market on the planet. And so the cause and effect fulcrum is separated by some distance. So how does this apply to you as a trader? Well, maybe a way to make this point is to go back to what we talked about a week ago. We talked about Roku, that we look at the supply-demand equation in Roku. Don't buy it. Well, that was right. We talked about the supply-demand equation in GM. I didn't like it. I mean, I thought this was best, right? Denison, I'm surprised you didn't take me to task on this, because I said, okay, so you have rising demand and low supply. Shouldn't the price rise? Well, by the time we got to earnings, the day before earnings, now we have flat demand. That's what this line is telling us, and rising supply. It can change very quickly in an individual stock, but not over the whole market. The consequences over the whole market will take time. It's very difficult to know exactly when something will happen. But we told the users of Edge a week ago that if you looked at the flows of passive money in the market, they were the weakest on July 30, the end of the month, since a year earlier on August 3rd, 2020. And what happened a month after that? Well, the market corrected. I'm not predicting a market correction. I'm trying to illustrate, in answer to your point, Spencer, that there's a cause and an effect, and they're delayed. So if we're waiting, we want to know something before it arrives, which is the point of Edge. You want to know what the supply-demand equation will tell you is coming. And we want to have as much advance notice as we can. No one can know perfectly, but that's how I think about it.
Okay. Well, we'll have to see how this prediction, I don't know if you want to call it that.
Well, let's give your audience one last thing, because
okay.
if we want to look at, well, where's it best? Quast, if you're telling us everything's horrible, and I'm not, where is there opportunity?
Yeah.
Well, I think there is a place where there is opportunity yet. I think in very short increments, about 10 days. But if we go down here, and what I'm doing is looking at the dashboard, which is like the bridge of your vessel. Look at healthcare. So healthcare has a rising demand curve and a falling supply curve. It's not super strong, but if you were going to look someplace, that would tell me that's a place to look. There are 543 companies, and passive money is the lead investment behavior. Indexes, exchange traded funds, quants. So that tells me with a week to go into options expirations next week, money is still flowing into healthcare. So that's the one place where I would look currently to find opportunities.
Do you think the news flow with Delta is a player there? Do you think that is potentially
could be? It's interesting that you say that, because I have a COVID-19 portfolio that I set up.
Can we see that?
Sure, absolutely. I do want to show you one thing. Notice this: Alnylam, DaVita, maybe Intuitive Surgical. Those are three things where you have a demand number that is above 5 and a trend that is up and short volumes that are appealing. those could have gains. And I'm not saying it's going to be a long time, but mathematically, if we're trying to stack the probabilities in our favor, Alnylam, DaVita, Intuitive Surgical are possibilities. So then if we go look at the COVID-19 portfolio, and I think I got, don't laugh, everybody, but I think I got this from Jim Cramer. So it's got 11 companies in it. And notice this. So here again is the demand side. The demand side is above 5, and it has ticked up the past 3 days. Short volume, the supply side is still pretty high, near 50% of trading, but it is declining. Rising demand, falling supply tends to mean that there is opportunity. And that, I think, is a reflection. There are people betting that the fear, this renewed Delta variant, and now there's even what's the next one we're talking about? There's
Lambda.
Yeah,
Lambda.
Yet another variant. And I think we're going to get these. This is the history of coronaviruses, which we've known about since 1967 in human beings. And coronaviruses are very unstable. They're very difficult to vaccinate. That's why we've never developed a successful vaccine for them. They're unstable, but they become the cold. Most of the 1 billion colds that we experience in the US in a normal year come from coronaviruses. So you have to blow your nose and you get a little fever, you get the aches and chills, and then life goes on. And this is where I think this COVID-19 is going to eventually fall.
It'll just weaken itself out. It'll continue to weaken as it continues to. I hope you're right. I think I hope you're right. I think think that as well. Like, years from now we'll be looking and COVID's around, but it's just a lot weaker strains of it.
I know 20 people right now who are all vaccinated who got the Delta variant, and they're all fine. A bunch of them are youngsters who are out surfing, and they're fine. They're not even taking NyQuil. They're fine. So okay,
vaccines helping.
Right. Exactly, and the human immune system is fabulous. It works really well. So am I frightened? No, but to answer your question, there is a little bit of betting occurring here. Now, it's not massive, and that tells us something too, Dennis. There's not a big flood into COVID-19, but the supply-demand equation says people are making a little bit of a bull bet on those. So there they are.
All right, Tim Quast joins us every Monday. MarketStructureEdge.com is his platform. You can try it now. Link is in the description. Tim, as always, a pleasure. We'll talk to you again next week.
Sounds good. Have a good one, guys.
There was a great question from someone in the chat about Robinhood, and it's an interesting point. And the question was, why is Robinhood trading more with Bitcoin right now than Coinbase? And my answer to that, and I apologize because I forgot who asked it. Nicole asked it. Nicole Harris. My answer to that was, it's probably too early to tell.
It is. There's no way you can see. I don't see a correlation there at all right now. The Hood is on the random walk right now. And if you go back to your finance courses, the random walk theory was a theory that you can't predict future stock prices from past events or from technical analysis or fundamental analysis. That stocks just walk a random walk. There is times where stocks walk a random walk. AMC might be one of those stocks, to be honest with you, but Robinhood right now, I think, is random walk as well. Its supply demand is a little more unpredictable. It's a tough stock to trade. They eventually do start to find correlations. You could see eventually a correlation developing because obviously Robinhood trades a lot of crypto. So I could totally see in the long term that Robinhood could eventually become correlated to crypto. I don't think it's there yet because you're only on day 7. So I think it's too early to see. Like you see Coinbase, you see a clear correlation in Coinbase and cryptocurrency. You say Mara, you see a clear correlation between Mara and cryptocurrency. Do you see a clear correlation right now between Robinhood and cryptocurrency? This morning you do. But would Robinhood have been up $3 even without Bitcoin being up? Maybe. I think eventually you do see that correlation develop, though. So it is a good question. And I agree that I think Robinhood could eventually be seen as a crypto play. Obviously has a lot of other stuff in there too. But right now it's still so much random walk. Could Robinhood go red on a day that Bitcoin is green? Yeah, absolutely. Right now it could do anything. It's still just, flowing around. Supply and demand's crazy on that right now.
Yeah, and $59, and that just looks like the area where maybe wants to hang out for a couple days. We did get through it on Friday, just digesting that whole move from that double bottom. I believe it was 33 and a quarter up to that all-time high at 85, and now the Bulls and the Bears are just kind of scratching their heads and deciding, are we going to hold this 59, go back up and test that higher territory, or do we got some more work to do on the downside? I'm going to let you guys finish up here. I'm going to go over to premarketprep.com and cover some symbols, but great show today. Great information. Spencer, I'll talk to you in a little bit.
All right. DraftKings is still going here. We're in the 54 handle right now. So DKNG and then GNOG is going with it. Right.
Yeah.
So though GNOG hasn't really stopped all morning because now there's DraftKings, frankly. So
yeah, and it's going to continue to move. So GNOG is not just going to stabilize around 19. It's not a cash takeover. This is a stock takeover. So as DraftKings moves, GNOG will move too. If DraftKings rips another $3, GNOG should hypothetically rip up a 0.365 times 3, so about $1.10 if I'm doing that math.
Wow, that was quick. I was about to.
I'm trying.
Later.
I don't know if I'm right or not.
Jeez, that was good. Okay, all right, Dennis. Great morning. Good to hear from you, and have a good day. We'll talk to you tomorrow.
Sounds good.
All right. It is 9 o'clock, and at 9 o'clock on Mondays, I bring on Matt Hammond from IPO Warriors to preview the week in IPO land and recap what he did last week, what he got right, what he screwed up, and what his thoughts are as far as trading the big IPOs from this week. Let's bring Matt on now. He's back in his normal home with his normal setup, I think. Matt, Good morning.
Good morning, Spencer. How's it going?
Are you back in your normal setup?
Normal setup, and I've switched to a lens with a wider aperture, so hopefully we're getting more light in here. I'm not looking like closet man.
Not in the closet anymore. Awesome. All right. How did the week go for you?
Surprisingly well. There are some interesting things to talk about in terms of how the IPO market has been shaping up for the last couple weeks. It seems to have kind of hit a culmination last week and the week before, where we see almost half of the IPOs that were scheduled have been pulled. And it's normal to see an IPO or one or two IPOs get pulled. Yeah. But we've seen almost all of the leading names get completely suspended. And they're saying things like, oh, well, it's, it's just the market conditions. Oh, it's the, market turmoil and I just don't see it that way. I see it as a reaction to two things. I think that it's retail investors getting more of an allocation, and I feel that the investment banks aren't really loving that and aren't endorsing that. And I think they're saying, look, the way that the IPO process has always worked, even though you guys think it's unfair, is the companies get a stable source of investment from us, from the big money, from the hedge funds, from the investment banks. And then the reason we buy it at that price, at that IPO price, is we're guaranteed not to lose our money because we turn around and sell it to the retail. The retail customer is our customer, not your customer. But what happened was, and we've all been complaining about it for years, and not just the retail investor who says, wait, this isn't fair. It's the public market. They're they're selling their IPO at $20, but we're not getting to buy it until it's $35 or $40 or $50. And you guys are just getting the rich richer and the poor get poorer. And, on the other side, the companies are saying, yeah, wait a minute. If retail is willing to pay $40 or $50 for this stock, why are we only getting $20 for it?
Yeah, there's so many. They're all great points. If you're a company and you set your IPO price at 20 and you see it open at 30, you're thinking, what the hell? Guys,
we just left a few billion on the table.
Just left a few billion on the table. But if you're an institution, you're thinking, well, wait a minute, this isn't fair. The field was always slanted in favor of us, and now it's tilted a little bit not in favor of us. Wait, we don't like this.
And that's why we were willing to invest not only in your high flyers, but also in your kind of like middle tier. I don't know, but since, hey, we'll make some money on it anyway, and it puts us in line for the bigger ones. But then you see like Robinhood came out and they just went straight to retail, and then it priced it right at the IPO price and then dropped from there. And yeah, they're sitting pretty now, but this isn't the game that they want. This isn't how they want the game set up. And they're kind of like, okay, I'm taking my ball and going home.
Right. Yeah.
And
Donkey Limit is like, great. That's our free money. That's the mindset. That's the mindset.
So that's what it feels like. And I haven't seen this many kind of mainstream, or not even mainstream, just financially mainstream IPOs get delayed like this. And we have very thin pickings last week after, after a lot of the big ones were pulled. And that doesn't mean we didn't have an opportunity to make some money. And there are some things we can learn from this, which I'll talk about at the end. Let's just jump into last week's trades and say and see what we see where we can make some money here. Weber we expected to do well. It's a brand name. Grills. Cook did well the week before, so that was kind of a no-brainer. European Wax Center. I just didn't know I didn't know the market. I kind of understood that, well, maybe it's going to do all right, but I just sort of had other things to do. And with Weber on the table, I stayed out of European Wax Center. Adagio, ADGI, it's a COVID play, made sense to play. So all three of these gave win opportunities. And we can see one thing that I've started doing a little bit more of is, instead of buying right on the debut, I've been letting things open and drop a little bit. And I'll usually set a debut, like a limit order, underneath the debut price. So if we can see the indication price, it was getting up towards 17. Normally, if I'd wanted to get in right on the debut, I would have put my limit order at 18 to make sure I get right on the open. But I said, you know what? We haven't seen an IPO just run straight out of the gate for a while here. So what I'm going to do is I'm going to put in an order down at about 16.15. And then if it keeps going down, you get to add more. The belief on Weber is that it's going to make a day 2 media cycle run. We've talked about this many times, how especially with the brand names, overnight you get to the end of day 1, the media comes out and says, oh, Weber, since the IPO price was actually down at 14, Weber debuts at a 20% premium, and everyone goes, oh, Weber, I like them, I didn't know they were IPOing, and then they buy up the next morning. And that's exactly what we saw here. So if you build your position on this downward slope on the open, then wait for, I just walked away. I honestly just went and took a nap, did some other things, didn't even watch it for the rest of the day. Waited till the next morning, got the day 2 run that I expected, took my profits right in the morning at 19, just above 19. And if you still wanted to hold some of your position beyond that, maybe let it dip a little, coming back up, or maybe you want to hold a position a little bit longer. I noticed it's back up towards 19 in pre-market this morning. So with these high recognition brand names, let them run for a day. And the other note that I'm making right now is, and this kind of blends back into this theme we opened with, which is, if retail isn't pushing the initial pop up, that means that they're not buying in the demand right off the debut. So there's no reason not to sit back, let it drop a little bit, or dollar cost average your position down a little bit and open yourself up to more profits when it does make a run. European Wax Centers, this is a company that's just out of my wheelhouse and didn't have time to really maybe call a couple salons and see how heavy their bookings were. I did read in the comments last Monday that some people with better insights into this industry were saying, oh, the waxings are booked out weeks in advance right now. So that might have been a good cue that this had strong demand. I just didn't know enough about it and sat on the sidelines. It opened at 19, very slight dip, so you could have tried to undercut it a little bit, but this is one of those where if you had tried to undercut it, you might have gotten left on the sidelines, which is also okay. Sometimes you don't need to be in every single one. You have to make your hypothesis, set yourself up for the win that you see, and if you miss it, okay, you're not going to catch everything. Off the open, if you believe that this was a strong brand name, you just let it run and then took your profits on day 2. If you're playing this, pretty tight, maybe you say, okay, it opened at 19, 21 is a nice win for me. Take 2 points, set your limit order up at 21, either take it out here, maybe get a little more greedy, hold out for 21.50. I don't know. But this, another one, we had 3 IPOs last week and all 3 of them gave win opportunities. So here are the potential plays on this one. Adagio Therapeutics. This one was kind of like, okay, I don't usually like to play biotech, but we did see, I think it was, what was it? ICGX or something last week was a COVID vaccine play that just kind of dropped a little bit out of the open and then ran from 23 up to 49. So there was at least kind of a, well, maybe this does the same thing. They're in COVID. They're making COVID treatments. Debuted at 21, not too high of a premium. It dipped a little bit, not a huge opportunity to build a position. But then it started like gaining momentum, and it looked like, hey, wait a minute, people are jumping in. It then hit a halt at 23.19. And at that point, you could see the level 2 orders weren't looking too strong. So either want to take your profits right away, or at least take part of your profits right away out of the halt. And if not, set a stop loss, keep yourself out of trouble, take some profit. It's always better to walk away with a small win than no win at all or a loss. So this was one that was worth being in. I kind of hoped that it would do a lot more than this, but when it didn't, I was happy to put some money in my pocket and end the week on a win. That's all we had last week. This week's featured IPOs are kind of a recycle of some of the IPOs that didn't debut last week in a couple banks.
Okay.
So there's not a lot to review here. Finwise Bank Corp. This is a Utah bank holding company. They do deposit and loan services to small businesses and consumers. Apparently, they're a fast-growing bank. Their interest numbers are going up, even though rates are going down, which is apparently a positive thing in the banking world. Really small float, just 4.13 million shares, but I just don't know that there's going to be a whole lot of interest in this to send it up one way or another.
Is this going on the NASDAQ or the NYSE? Typically, you see these small community banks trade on like OTC markets. I don't know how many small banks of this size trade on exchanges.
These are both going on the NASDAQ.
That's interesting. Huh.
So, yeah.
Okay. Anyway.
Yeah, my thoughts on these are I don't know, so I probably won't play them. If people start buzzing about them, there really hasn't been very much volume in a lot of these IPOs. Even the more recognized names have moved very slowly. It's not like we saw a year ago where everyone was just piling in and spiking them up and spiking them down. And I think that's part of the reason that the investment banks are not getting the pop that they wanted. That's why we're not getting the debut premiums that we're used to. Almost none. We're seeing a lot of IPOs price below, debut below the IPO price after bringing them down. Weber was supposed to be 46 million shares. They ended up going with just 14 million shares. And instead of a price range of 15 to 17, they priced at 14. When you see all that, you're kind of like, wow, they're getting a lot. I mean, I can only imagine these negotiations between the underwriters, the investment banks, and the companies where they're saying, yeah, you're not getting 700 million. You might get 240 million, and we're going to have to get a bunch of that from retail through like Webull app or E-Trade allocations. So all of this kind of, yeah, you following that, or did I?
Yeah. No, one thought I had, and this is going back to what we were talking about earlier, is I should mention that in terms of amount of money raised via IPOs, we are already at a record. We are at an all-time high for any given year. We've raised more than $96 billion has been raised this year from IPOs. So from what it sounds like you're saying, Matt, is like you could easily see a reality where like the final 4 months of this year are just like really like everyone like got their stuff out of the way for the first through the first 7-8 months of the year. Now it's going to get quiet for the last third. Sounds like what you're saying could happen.
I'm not sure if it'll last for the rest of the year, but it does feel like, and I hear other stories like, oh, there's a lot of money on the sidelines right now. There's not a lot of volume in the market.
There's always money on the sidelines.
Yeah, so
there's always money on the
some
sidelines.
of it might just be. Some of them just might be the midsummer. We're getting kind of towards the end of a long. But yeah, it could be a little bit of a fatigue and exhaustion. I think retail investors are certainly to the point where there's kind of like, look, I can't just keep buying every IPO that comes out unless I'm selling it too.
Yeah.
Yeah, and it's getting to the point where the really hot names feel like they've gone. I mean, the next big one that I see on the horizon is going to be probably Stripe. They apparently have hired lawyers to finally start implementing that process. But whereas before it seemed like, especially about a year ago, we were just getting big name after big name after big name. And, of course, every time I say that, something like Robinhood comes along, which, really was a big name and got a delayed reaction, but finally made that run. But the fact that Robinhood didn't debut at a big premium like we would have normally expected, and what they did to kind of, put some shares or a lot of shares into the retail investor's hand. We're seeing a little bit more. Yeah, I do believe, and I will get to that. And I want to circle back. So let me keep going.
Go ahead.
We'll come back to that. The next one we had here was Southern States Bank Shares. This is almost the same story as Finwise Bank Corp. This one's in Alabama and Georgia, pretty low risk. I guess they are already planning a 1.8% dividend yield. Very low float of just 2 million shares. But I can't imagine a whole lot of people getting super excited about these. So I'll watch them, but I doubt I'll play them. Aspire Global, this one's been rescheduled 3 weeks in a row now. It's an OEM for vaping products that are manufactured in China, sold in America and Canada. Just everything China related. I just don't even trust that this will actually debut this week. It's been on Webull for 3 weeks and still not sold out.
Great.
So, yeah, I don't really want to play this one. Another one, this is Adagio Therapeutics, clinical stage biotech, something about neuronal excitability disorders. Helps manage pain in very specific, conditions. I don't understand this stuff very well. Low float, maybe it attracts some players, but I'm going to stay away from this one too. I don't see any reason to get into any of these IPOs right now. I think that there's other things I can be doing to try to figure out what's going on in the market and otherwise catch up on some other work. It is interesting to me to go into this. What is with all these IPO delays? And are these just all of a sudden going to get scheduled? Like all of these went through their roadshows. They went all the way up to the day of their IPO, which basically means they sat down to do final pricing and didn't like what they were hearing at the table and walked away. This Better Being Company, Cadre Holdings, Clarios International, which apparently had huge institutional interest. Healthcare Royalty Group and WCG Clinical also both normally would have institutional interest. They clearly sat down at the table, didn't like the numbers they were given, and said, you know what? I'll come up with a reason. Market volatility sounds great. Let's walk away. I don't see a ton of market volatility, at least no more or less than we've seen over the past year. So I don't buy that excuse. What I understand, like just logically thinking through it, is that they're not getting the offers that they want from the institutional investors. And the reason the institutional investors aren't doing it is because they're not seeing the opportunity to make the immediate pop. And there might be some kind of payback here to the underwriters who they feel maybe are slightly betraying them. And maybe we've got kind of the corporations and the retail investment traders like us on one hand, pulling, tug of war on this side. And then we've got the institutional banks and hedge funds on this side. We've got the underwriters in the middle, and the underwriters saying, well, the institutional banks and hedge funds, those are also kind of our customers. Oh, but the companies are also, and they want more money, and retail is willing to give more money. They're also our customers. And until these kind of, who wins out, I think it's going to be an interesting landscape to watch for a little while. And the questions I have is, how do we play this? And my lessons and what I'm taking away for it is, one, be very selective. Like, I don't want to get into something that doesn't give me a high level of confidence. There's no reason to force myself to play these. I have a day job. I can wait to, for something big and, better to come along to get into. The second thing is, it's okay to buy the dip. Not every IPO is just running out of the gate. It's maybe, if you really like it, take a half position on the debut and be prepared to double down again if you do get an opportunity to buy at a lower price. And then the third thing is, be patient and wait for the run. A lot of these we've seen run on days 2 and day 3. You look at Hood, you look at Cook last week. I just showed you examples of Weber. Sentinel, which I bought almost 3 weeks ago at 46, dipped for about a week and a half. Then it came back up. Then it finally went up to 55, and I was able to get out for, a nice solid win. But it took longer than just the one-day runs that we were seeing on things like Snowflake. I mean, for example, was like right away you took your profits. NCNO, Big Commerce, some of these IPOs that gave 30-40% runs in days 1 and 2 a year ago, we're not really seeing that as much. We're seeing more of a delayed reaction. And some of it is, I think, retail investors have just become more savvy and said, wait, there's no reason for me to buy it right off the debut if these aren't going to run. And actually, when everybody tries to buy on the debut, we end up pumping up the price in a way that we don't need to. Why are we feeding the investment banks their instant profits if we're so unhappy with it? All we have to do is not set limit orders.
Just wait. Just wait. That's all I got to do.
Literally waiting like a few more minutes, and then let it dip for 10 minutes, and then buy in. It's amazing. So
it's a really, really good observation. This space has been ripe for disruption for a while. We have it now with direct listings and SPACs to the extent that those are going to still be around. But it is a fascinating dynamic that is playing out here in real time for us. So yeah, great observations. There's a lot going on here, and I very much look forward to seeing how this trend develops. Whether we see more of these delays or reschedulings or whatever cancellations, whatever you want to call them, or if we see a rebound in activity and how these things behave. Because I've always found the IPO process fascinating because the way the way the game is rigged to favor certain parties over others, and no one disagrees about that, right? That's like everybody agrees that the IPO process is not fair. That's the point.
Well, it's not fair, but people don't seem to understand, or maybe they'll start to learn that there is a reason behind the the way that it's set up. And it took me a while to understand that, and I agree. I mean, the IPO process is fascinating. I've learned more about how the markets actually work by playing IPOs and researching them than I ever learned just trying to trade. Opening stocks that have been on the market for years, and yeah, I think another thing that we, that's in the mix in this somewhere is that China is pretty much like left the picture for now. We're not seeing any stealth IPOs. We're not seeing any mainstream IPOs. I don't know if Chinese investors are also just like, well, screw this. I'm not, getting in on this. I'm just going to invest in, Hong Kong and Shanghai listed companies now. But we're definitely in a little bit of a standoff here.
Yeah,
and it's on one hand it's fascinating. On the other hand, I miss the days of just having like 8 IPOs to play and choosing 3 or 4.
Look, we're already at the record. The record for number of IPOs in a given year was 275, and we're at 274, right? So you've had your fun. You had your fun. Right? You've had your fun.
Yeah. No, I'm looking for, and we'll find. Look, I still did really well last week, so I'm not complaining. And you never know. Things. This is the right market for somebody to step in with a stealth IPO.
Sure.
And I'm still gonna keep an eye on when these do get rescheduled. I don't know how much advance warning once they've already done their roadshow. How much time they really need to say, okay, well, actually, we're going to go live.
Yep.
There are likely to be, smaller companies, little biotechs, little VR, AR type plays, which ended up being incredibly profitable.
Sure.
That slip up on that pop up on the radar right in the middle of the week. So stay tuned. Sign up for the newsletter. Go to IPOwarriors.com. Get the updates. Get the recaps. Get the strategies. Just because things appear sleepy, these are often the times when kind of the calm before the storm, and just when things start to get quiet, that's when something will come along and really give you an opportunity to take some big profits. So, all
right, Matt Hammond, thanks a lot, sir. Talk to you next week.
Thanks, Spencer.
All right,
have a good week. Cheers.
It is 9:23. I'm gonna hop off here in a couple minutes. David Green will be live trading the open at from 9:25 to about 11 o'clock. Before I go to throw it to him, though, just want to do a quick crypto update. You can see here on my heat map green across the board here. It's another one of those days where there was a couple of days there where it looked a little bit dicey, but Bitcoin futures are at least at 46,000. Ethereum futures are at 31. 100 here this morning and rising. So it was a great weekend for Bitcoin. You tend to see these Saturday night, Sunday morning either dips or rips. In this case, it was a rip, so we are up across the board in crypto land this morning. So a good start to the week there. A reminder that these Benzinga crypto updates are brought to you by Voyager. You get a $50 in free Bitcoin when you use the code ZING. On Voyager, deposit at least $100 and make your first trade with over 60 assets to choose from and annual yield earnings of up to 12%. Voyager is your launch pad into the world of crypto. And on that note, that's going to be a wrap for me. So everyone, do me a quick favor. You know what? Actually, before I say smash the like, let me just check. How many likes are we at here? I'm going to have my volume on. Oh, no. No, I don't. Okay. Likes at 320. Can we get to 4? Can we get to 400? That's a tall order in the next 30 seconds. But I think we can do it. Thanks to our guests today, both Matt Hammond and Tim Quast. Again, the links to their various sites, newsletters, platforms, all in description. There's marketstructureedge.com and here's IPOwarriors.com. So thanks to Matt and Tim. Thanks to all of you in our chat. As always, please remember all the information from our show is meant to be used as informational purposes and not for investing or trading advice. I'm done. We're getting into the open here. David Green will be live in a couple of minutes, if not less than that. And I'll see you guys a little bit later. Have a good luck at the open and stay green.